Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, August 21st, 2018. In this video, I want to go over the outlook for the international markets. So what we'll go through is, well, actually, I'll hit on the U.S. markets here. So we're basically going to run through. I have a list of global ETFs. So these are both actionable trade ideas because you can, if you're a U.S. investor, you can invest in these ETFs. If you're, overseas, you can certainly, invest in, whatever index or similar type ETFs they have over there. I'll just say it up front. It's the European and Asian markets that look most attractive to me right now. In fact, the European and Asian markets, the majority that I'm going to cover here, almost look like inverse as far as my outlook goes. It's almost a mirror image or an inverse image of the U.S. markets. In other words, I see minimal upside, not a very attractive return on the U.S. markets. I'll get to that in a second on the charts. SPY, we won't spend much time there. And I see some nice setups in the, like I said, a lot of the non-U.S. markets out there. So I'll go through my watch list. I don't know, maybe I think it's looks to be just over 2 dozen ETFs. And the video gets long, I'll cut it off towards the bottom. I have them sorted by market cap. Now, the fact that the my outlook for the U.S. markets and these international markets vary. Most of you probably know if you followed, if you follow investing and trading closely, you know there's been a huge divergence. Some of the biggest divergences we've ever seen between the U.S. markets and the rest of the world. Most other, major stock exchanges around the world, with the U.S. market pushing at new all-time highs, and a lot of the majority of non-U.S. markets well off their highs. So there's been a divergence so far this year. Now, not by coincidence, a lot of that has to do with currencies. The U.S. dollar has been extremely strong. The euro, most Asian currencies have been sinking against the dollar. So that therefore that certainly plays into it. Now, what I'm going to start out here real quickly is just an update on the euro U.S. dollar. If you followed my analysis recently on gold and the commodities, I've posted extensive analysis on the U.S. dollar, particularly the euro US dollar pair. The euro is the largest component of the dollar index. That's why I like to focus on this chart. So just to rehash what I've been highlighting recently is I've laid out a scenario, highlighted first and foremost these the support level right here. These two lines right here, they're very close together, and you can see that has capped all the pullbacks since going back to about July of 2017, and more importantly, it capped all the pullbacks right here. So even while we're on this support level, I laid out a scenario before it even happened of what I call a bear trap or a false breakdown scenario. I can't say with conviction it's happened yet, but we're very close. You can see what I mean by that is a false breakdown. You had a breakdown there. Once that support level, you can see, was very well defined. And once it broke down, as often is the case in technical analysis, when a well-watched support level is broken, you have a very impulsive sell-off. And you can see that big red candle, one of the biggest red candles we've had in a while there on the euro US dollar. So that was our breakdown. And the scenario I laid out was that we had potential divergence at the time. And I said if we broke down and then snapped back, and now we need to regain this line. But if we did that, then we would put in, as you can see down here on the indicators, positive or bullish divergence, with the indicators making higher lows. You can see now we have a bullish crossover on the PPO. It's starting to cross, just crossed over, and we have lower lows in price. That is, positive divergence, which is bullish. So now to really, that was step one, let's say, of the bear trap scenario, which is a bullish scenario. Traps bears, people that short the euro go long the dollar. And now step two would be, well, we had step two really, which is the reversal so far, but we've come right back to that former support level. And remember, support once broken becomes resistance. So right now, this scenario is still only a potential. It's in play. Excuse me. I think it will happen, but we need to see this level retaken. So we need a big candlestick up here. We need to come back up solidly back above that support level there, which is right around 1.154 or so on the euro US dollar pair. And then it would be even better to see this downtrend line right here taken out. So we move up here, take out that downtrend line, and then continue on up. What that means, that's bullish for the euro, bearish for the dollar. And so let's just take a look at one other chart and show you something here. So what I'll do here is overlay the euro US dollar pair. So this is the euro pretty much. It's the euro against the dollar. I'm going to overlay CWI, which is CWI is the Spiders MSCI ACWI XUF ETF. Long, that's a mouthful. Basically, it is an index of uh, all world stock markets. It may not have every single one, but most of the developed markets. So it's the global stock markets minus the U.S. And you can see an extremely clear correlation there between the euro and U.S. dollar. So basically, remember, this is CWI is what I just overlaid. That's the white line. So logic, or basically looking at this chart would indicate that if we do get that reversal in the euro US dollar, you're going to see global markets, excluding the US, rally. That's just pretty clear correlation there. And again, don't pay attention to the differential lines. Look at the direction. When one's going up, the other's going down. I mean, when one's going down, the other's going down, vice versa. You can see that's a nearly perfect correlation there. So, all right, that's that. Let's turn that off. And now let's get into the charts. I'll give you trade ideas. Um, Before I do, if you just want some of you just want to know what's a good opportunity right now, I'll start out with just that CWI, the ETF itself. There's a couple of them out there, but this one again, this gives you global exposure. If you just want a one and done type scenario, I'll go over the individual countries. Obviously, some look better than others. So I think you can outperform if you built your own little portfolio of global ETFs based on the most bullish countries out there. But again, if you want just a one shot, and if you happen to have, let's say, 401k funds, there's mutual funds out there such as American Funds Euro Pacific Growth Fund. That would be an ideal fund because that's again, as I go through the charts here, those are the countries that stand out, both the European and Pacific countries. And it's pretty broad based too. I was surprised across the European arena, even Russia, all of these countries in there. Um, were looking pretty bullish to me. So again, you have mutual funds and 401ks, and then you have the ETFs like CWI and ACWX also tracks that same index. iShares MSCI ACWI XUS Index Fund ETF. There it is. And you can see both of those have a nice bullish falling wedge pattern. You have pretty strong bullish divergences. They've yet to be confirmed, but you can see the momentum indicators curling up quickly. So that's what I like to see. And we have a nice downtrend line as well to watch. So, it may play out, may take a little more time to play out. In other words, we may come up, hit that trend line once more, and you also have pretty significant resistance just above at 48.44. So I'm going to tell you right now, if we broke out, I would expect a back test. So we either come up and we fail here soon. I think there's a little time for this, so you may want to scale in. We don't have any solid buy signals yet, but again, I really do like these charts, and I think that the risk reward right now is more favorable on these non-US markets than it is in the US markets. US markets, as of tomorrow, if they're going to challenge it, all they have to do is pop just slightly above where they are, the S&P 500 I'm referring to, and then we will have on record the longest bull market in history ever, the US market. So that and it's almost a given when you get that close, and they're going to parade out the bulls on CNBC and all the shows. They'll probably get a little pop if we do take out those highs, but again, I think it'll be short-lived, and it's all about risk reward. So would I short the U.S. markets right now aggressively? No, but I do think they'll reverse, and we'll get to those in a second. So there's ACWX. You have the downtrend line to take out. That would be your first buy signal, and again, that 48. 44-ish level, and I think a minimum target's up here about 50, 80, and to try to put it for you in percentage terms, like to quantify what we're looking at, about a 7% pop. And again, these are balanced, diversified. I mean, that's about as diversified as you can get. This is a compilation of many different indexes. Indexes in themselves usually hold 50 or 100 or more stocks, and so you have a lot of indices. So a lot of diversity there among different sectors, countries, industries, etc. Um, and just looking, I just wanted to add this line real quick. You can see this was the uptrend line, which was broken and back tested there. And so now here's our downtrend line. So again, we've had a healthy correction, and let's just dive into these individual charts, and I'll give you some individual, I should say, trade ideas, as well as an overview on what I'm seeing. So we'll start with the U.S. real quick. I've covered this extensively because I'm always covering the U.S. markets. There it is. So you can see that high back from late January. And it's, again, at this point, and I said it before, when you get that close, it's almost like a magnet. When you get that close to all-time highs, new highs on a stock or an index, you're usually going to punch through it. So, but the point I've been making is any new high is anytime soon is guaranteed to be a divergent high. You can see these are the divergence lines down here, negative divergence on the RSI and PPO. So even if we rallied for a while here, let's just pull this line up like this and say that we rally another, what would be about two, we call it, we can even go up, let's say 3% after we pop above the new highs, 3% or so. As you can see, it would still be a divergent high and look something like this. And that would be what I would expect. I think that breakout to new highs will fail in the US. We have the divergence like I show you there. We also have divergence even on the shorter term time frame. We have divergence right here as well, from this high, this peak to this peak. So across the board, that's what it looks like in the US. So again, even though the trend is up, I think the risk reward, the next, I believe the next 10% move from where we're at today in the US markets will most likely be to the downside versus the upside. So now let's go look at the international markets. All right, let's go through these in no particular order. Let's go back here. Okay, this is Taiwan. There's a downtrend line to watch. Not one of my favorites, actually. I'll have to say that one doesn't stand out to me as it's very compelling. There's just big trading range here. Let's look at Canada. This is EWC, and here's an uptrend line right here. And again, Canada doesn't really stand out to me. It is above trend. You can buy pullbacks to this trend line, or if you're long, put a stop below. There's also some horizontal support just below it right here on this level. That's about, let me give you the number, 28.33. And it may want to push up. If it does push up, here's the thing with Canada, and here's what I think will happen, a lot like the US. If it pushes up, you have this previous reaction high right here at around 29.57 or so. So what I could see happening with Canada, like the US, push up, take out that previous high. Again, see, Canada is well below the high back in January. The US is already challenging that high now. Canada's been lagging. But if it pops up soon, as I suspect it will, in sympathy with the US, it will put in a divergent high. This is what it'll look like. Negative divergence here, shows the momentum is waning, and then go on and probably break down there below that wedge. So again, I see minimal upside compared to the downside potential in EWC, that's Canada. EWM Malaysia, that one's not one of my favorites. I'm probably giving you the ugly charts first, but again, I'm not going through these in any particular order. I just have a watch list here. Here's the Greece ETF, GREK. And this one looks really nice here. Greece, big news was the austerity is ending, I think, this week. It's good or bad, who knows what'll happen. But the charts tell me this is a time to step in and buy. I like this one for a couple of reasons. Number one, we are here at support, and I'm referring to going back into early 2017. Look at all these reactions back here, and there might be some to the left of the chart there. But more importantly, we've fallen to support with bullish divergence in place. It needs to be confirmed, meaning that Greek needs to reverse here. This GREK ETF needs to reverse. If it does, and you can also see I had some resistance right here around 858. So the safe bet, wait till 858 is taken out. You can also go long and pull back down to around 822. And first target here is about $9. You can see pretty decent support along this level here. That's the $9 level, and then above that around 946. So I went through these charts and marked up the levels, so you can see any overhead lines are potential targets, even maybe all the way up here to 1073. We'll see. I can't see out that far right now. The charts don't really. This is a relatively small divergence. We had a big negative divergence or divergent high right here, and this is a pretty decent divergent low on the daily time frame. So try to quantify it for you. My preferred swing target right now would be up to about 946 or so. That's about a 12 or so percent gain for Greek. EWZ, Brazil, not so hot about it. I'm not hot on the Americas, including Central and South America. Brazil might be interested. I might be interested in that one, depending on how the charts look. If it gets down here to around that $31 level, you can see lots of reactions on or around that level there. So it's in a downtrend now. It was rejected off this downtrend line. A lot of reactions up here, and so that's the level to watch. So this one, like I said, I wouldn't be interested at all until it gets there. And looking at the indicators and everything, what I think probably happened, maybe shoot through there, put in a divergent low, then reverse. And what that would look like is something like this. You'd have divergence here on the indicators. We draw your divergent line like this. That would be a nice little bear trap, false breakdown scenario. A lot of eyes, I'm sure, are watching this level. And to see it reverse and come back up would be bullish. So there's little work to be done on Brazil, in my opinion. EWA, Australia, not one of my favorites. There's an uptrend line to watch, similar to Canada, really, if you look at this chart. You have that uptrend line, you have resistance just overhead. We'll probably, if the U.S. markets pop and run above those January highs soon, we'll probably see the same thing happen here in EWA, just like the EWC, the Canadian ETF. And doing so would give us that divergent high there. You can see if I draw the lines out, I didn't have them marked up before. That'd be your divergence lines, and that'd be a little false breakdown scenario, false breakout scenario, and a reversal. So again, I see minimal upside there. That's another, that's Austria here, actually EWO. So there's another European country looking good. And there's a downtrend line, divergent low, everything I like to see. If it continues lower, and that's a possibility with any or all of these, because divergence in itself is not a buy signal, merely an indication that a trend reversal is likely. So what I'm looking at here, we can go up, test that line again. We might work our way down here. There's some support here. It's not solid support, but that's why I have a line there. It's decent support. We also have support right here. I should have actually added a line right there. So we are at support now on EWO. So I do think it is objective to step in here. That's Japan, or EWJ, Japan. Nice divergent low right there. You can see the PPO curling up. There's your downtrend line. There's a target there. First target's of 59.67. Next target's up around 61.33. And that would give you about almost a 4, and then about almost a 7% return from where we're at right now. With the first buy signal to come on a break of the downtrend line. But again, sometimes you can go low at the bottom of a falling wedge like this with a stop not below, or maybe a partial position you can add if you work your way down within the wedge, or you can add on strength if you break out above the wedge. RSX, this is Russia, VanEck Vectors Russia ETF. Again, nice divergent low here. Same story. There's a downtrend line to watch. Quite a bit to even get up to challenge that downtrend line. Even if we come up and test it again, which I think is likely, that's about an 8% gain. So you can buy it around here. There is some support on this level here. You can see these reactions back here. So we're at support, and we had a little bit of a fake down scenario there, false breakdown, and it's recovered that level. So this is another one I like. EWS, Singapore. Singapore has almost divergence now. Now you get a little bit of choppy candles. You're always going to get gaps in these ETFs, and that's because Singapore is trading halfway around the world. When our markets are closed, this is EWS. This ETF trades on the U.S. exchange, but you're going to have gaps because their market's going to close, and then the U.S. markets open. So that's why you see a lot of gaps on these, a lot of these overseas, especially the ones over, the Asian ETFs. But so you have almost divergence there. You can put the divergence line like that if you exclude that gap, and then say you have some really strong divergence. And again, there's a possibility that these divergences could certainly extend. These momentum indicators are very strong. They're much higher. As you can see, price is making a virtual and equal low, but the PPO and the RSI are much higher, putting in much higher lows. That's a sign of strength, or at least waning momentum to the downside. So there it is. I think you can go long here, maybe a partial position or even a full position with a stop somewhat below. It depends on your trading style. If you want to wait for a solid buy signal on this one, you'd probably want to see these recent highs right here around 24.65 get taken out. EIS, this is Israel. Not as hot on this one. This one did break out to new highs recently. I'll give it that. And on face value, a breakout to new highs is bullish, but new high breakouts to new highs that have negative divergence, as we see here. This is your divergence lines. It's not confirmed. So what that means is we can continue, or Israel can continue to push higher and then take these divergences out. As soon as these indicators, see the RSI is pushing it right now, goes up much more, you won't have any more divergence on the RSI, but you will still have some on the PPO for a while. But again, not one of my favorites. Maybe this one needs to come in and back test, or that breakout may fail. EWH, Hong Kong ETF, nice bullish falling wedge. There's your strong bullish divergence and minimum target there about $25. And let's add one more line here. Okay, I had to pause the video there for a brief interruption. So it's a potential target up here at about 26.59. EWK Belgium ETF. You have I like this chart. You have support right here. You can see reactions over here back in 2016, reaction 2017. Then we gapped up and took it out. That's, that shows you how technical analysis works. It was taken out on a gap, so that's an impulsive move. And then once you took out resistance, you can see we rallied. And then we came back, we back tested that level. So it's a very well-defined support level, support former resistance level right here around 1913 or so. We're a hair above it now, close enough. Again, maybe another jog down, maybe not. So I like it here. I think the risk reward's very attractive with a stop somewhat below that level, maybe on a daily or weekly closing basis. And the next buy signal would come on a break of this downtrend line. First stop would be here about 2079, and to try to quantify that for you, that's about a 5% gain from where we're at, 4 3/4. 2154 would be the next stop there. That's about 8.5%, and that's EWK, Belgium. EWU, this is the UK, United Kingdom ETF. There's nice bullish divergence. There's a pretty clean downtrend line to watch. We've bounced off support here. Again, you can see all the reactions over here back in the past. So it's a well-defined support level. And, any pullbacks again to that level would certainly be an objective entry or add-on. But we may not get that. These charts are really starting to firm up. And again, if the call that I made on the euro, if we start to see the euro take out that level, regain that recently broken support, you're going to continue to see strength in these European countries here. So there's all your potential targets up there, all the way up to about 36.68. Those are all potential price targets. EWN Netherlands, same story. Divergent low, downtrend line, right, just briefly went under support and regained it. EWW, this is Mexico. Again, I'm not so hot on the Americas. Here's we had a divergent high right here. We had, just like we had a divergent high back here, and you can see what happens after these divergent highs. You get these corrections, and we already had one. Now this one took us back to the trend line, so we are at trend line support. It's not anything I would short right now. Maybe if that trend line's broken, but I think Mexico may work its way back up here, have another thrust. This is a pretty significant resistance level, about 54.64. So that would simply extend the divergences that are in place right there and look something like this. If we extend these divergence lines like that, maybe one more thrust up, and then another pullback to the downtrend line. But again, I don't see a lot of opportunity there. It's just not worth it to trade to try to get. What is that? If we bounced up there, not bad, about 6%. But again, with the divergent high already in place, this trend line could go before we get there. So confidence isn't very high on Mexico. EWL, that's Switzerland. There's a downtrend line. There's your divergence. Actually, divergence on the RSI, not so much on the PPO, but still, I like the look of this one. You don't always have to have divergence. That is not a requisite for, trend reversals. Not by any means. It just helps to confirm one or firm up the case for one. But in this case, we already took out the trend line. We had a downtrend line, which broke out, ran right up to this target here, this resistance level 34.74, had a reaction, pulled back to support. So the charts are playing out nice. And this trend indicator, the PPO, is above zero and it's starting to curl back up. So I think this one will have another thrust up. I think Switzerland comes up here to at least that 35.43 level and possibly more. EWD Sweden didn't have any divergence drawn, but again, that doesn't matter so much. I think if a lot of the European countries go, we'll see this one go as well. There's a downtrend line. Not one of my favorites, I'll say that now. Some of the other ones that I highlighted were, But this one you do have a downtrend line to watch and then potential targets up there. EWG, there's Germany. Germany looks nice. Again, this is a major global index, and it's going to certainly have a big weighting on those global index, non-US global index ETFs. And you can see the nice downtrend line to watch, divergent low that happened right at support. So Germany's looking good as well. There's a big gap right there when we took out that level, and we tested it recently, tested again, and we're moving off it. EWQ, this is France, same story, bullish divergence, downtrend line to watch, and I think this one can work its way up here to about $33 over time. That's about another 7.5%. FXI, China's looking good as well. China had support and recently defended support. You can see going back to 2016, 2017, this area acted as support. Once it was broken, we back tested it. It held as I'm sorry, resistance here, resistance. Then we broke out, and it became support right there, and we came very close to it recently. Again, this ETF isn't going to track the index perfectly. This isn't, this is a tracking ETF that trades on the US market, so that's close enough. And again, we may or may not need one other thrust down. That's why I pointed out these downtrend lines. That would be your next buy signal, and you can see all the potential price targets. And I do think, at the very least, I think this one's has a good chance of being hit, 45.75 from where we're at now. That would be a gain of about 8.5%. If we do get another thrust back down here to that 39.50-ish level, um, that would offer an objective entry again, and that would be about a 16% gain to there. And if we go all the way up here to about 49.50, that's about a 25% run. EWY, South Korea, there it is, strong divergence in place at support. So that one looks good. And here's your potential price targets. Downtrend line's much higher on this one. You have about, just to get up to the downtrend line from where we're at now, if I can grab that candle, I have to move that line. Give it to you. That's about a 9.5% run up to the trend line, and as well as that 71.76 area. So that would be an ideal swing target right there on EWY. Those intersecting resistance levels at 71.76 level in the downtrend line. GXC, this is another China ETF. You can see the bullish divergence in place, a pretty clean downtrend line. This one's in a descending price channel. So it's objective to go long at the bottom of the channel or on a breakout above the top of the channel. First target 105.74, give or take, and then 117.33. EWP, that's Spain, nice falling wedge type pattern, divergent low. There's your downtrend line, potential price targets. Looks good up to maybe 34 or so. EWI, Italy, divergent low, same story, downtrend line. So you can see the common theme here is the majority of European ETFs and look the same with these divergent lows at support and as well as the Asian markets. So that's it, guys. That's all of them. And I may add some of these as official trade ideas or just go with that CWI again. CWI being an ETF that really gives you international exposure, and you're going to have the majority of those will probably be mostly the European and Asian countries in there anyway. So you can see the charts look very similar and the returns would be comparable. And it's a one and done thing instead of trying to pick a dozen or so of those individual country ETFs. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.